All right, guys, here we go. We got Freeport-McMoRan. It's currently sitting at $63.37. It's down over, it would have been Friday. This is in the after hours. It's about 1 a.m. on Saturday. So it would have been down 9.07% on Friday. And it's down a little bit more in the after hours, about 0.11%. In the past 5 days, it is down 6.42%. In the past month, it is up 4.55%. In the past 6 months, it's up 40.82%. Year to date, it is up 24.77%. In the past year, it's up 49.67%. In the past 5 years, it's up 55.13%. And on a maximum chart going back to July 14th, 1995, it is up 387.46%. That is Freeport-McMoRan, ticker symbol FCX. So, let's check it out. They got a dividend of 0.95%. That's 15 cents a quarter. They got a PE ratio of 33.55, a 52-week high of $72.09, a 52-week low of $35.15, with an EPS of $1.89. They got a market cap of $91.10 billion and 1.44 billion shares outstanding, with about 29,000 employees. Fascinating. Let's check it out, their earnings. So here we go. They released earnings on April 23rd, 2026. They got an EPS of 57 cents, so they beat by 19.78%. They were predicted to get 48 cents. They got 57 cents. Very nice. They also beat on revenue by 4.93%. They were predicted to get $5.94 billion. They got $6.23 billion. Pretty cool. Let's go down and we'll see if they've missed lately. Alright. So going back to Q4 of 2024 was the last time they missed by 4.5%. They were on revenue here. They were predicted to get $5.99 billion. They got 5.72. So, modest miss. Modest miss. And then we go back to Q2 of 2023 and they missed on EPS. They're predicted to get 36 cents. They got 35 cents, a 1.44% miss. So they've missed every now and then, evidently. We see that, you know. The perspectives from across the web. So Freeport-McMoRan trended upward in June 2026, reaching all-time highs near $72. Catalyst includes soaring copper prices exceeding $6 a pound and strong Q1 earnings beats. Analysts project continued sequential EBITDA growth through 2026 as production in Indonesia improves, though sentiment is balanced by Grasberg-related operational delays. The bullish view. Record copper and gold. Say it, don't spray it, bro. Jesus. The bullish view. Record copper and gold prices. Surging demand for copper-driven AI data centers, electric vehicles, and grid modernization pushed COMEX copper to record highs over $6 a pound. This price strength directly enhances margins, with analysts noting that every 10 cents change in copper price adds approximately $400 million to annual EBITDA. Q1 2026 financial performance beat. The company reported strong Q1 results with adjusted EPS of 57 cents, beating estimates by over 20%. Revenue rose to approximately $6.23 billion, a 9% increase year over year, supported by higher realized prices and sales volume. That exceeded earlier management guidance. Strategic leach initiatives. Innovation in leach recovery technology is progressing toward a target of 300 million pounds of low-cost copper production annually. Management expects these initiatives to eventually scale to 800 million pounds by 2030, providing a significant high-margin production driver independent of new mine construction. Whoa. The bearish view. Grasberg production forecast slashed. Operational bottlenecks and wet ore conditions at the Grasberg block cave have slowed production ramp up. Consequently, management lowered the 2026 copper sales forecast to approximately 3.1 billion pounds from 3.4 billion pounds, while gold guidance was cut from 800,000 to 650,000 ounces. Valuation and price resistance. Despite record highs, some analysts suggest the stock may be overvalued relative to its fair value of approximately $44 to $47. Technical analysis indicates potential resistance at these peak levels, with certain models predicting a possible correction if copper price momentum plateaus. Rising unit net cash costs. Average unit net cash costs are expected to trend higher, averaging approximately $1.95 per pound of copper for the year, up from previous estimates of $1.75. These increases are primarily driven by rising labor, energy, and power costs in North and South America operations. Let's just ask this. How does FCX's performance compare to major copper mining competitors? Freeport-McMoRan is currently being outperformed by its major copper-producing rivals on a year-to-date basis in 2026. While FCX has posted a solid return, it trails behind both BHP Group and Southern Copper Corp. 2026 year-to-date performance comparison. You can check it out right here. Some key insights. Revenue versus valuation. Despite having a lower market capitalization than Southern Copper, Freeport-McMoRan generates significantly higher total revenue. That's $26.42 billion versus $14.55 billion. Growth leader. BHP is currently the standout performer among these peers with a 36.98% gain since the start of the year, nearly double the growth rate of FCX. Market position. FCX remains a top-tier copper producer with a market cap of approximately $89.11 billion, though it faces stiff valuation competition from Southern Copper, which is valued at nearly $150 billion. Well, let's keep it moving. Let's look at, see if we can find an article on them. Here's some graphics here. Based on 15 analysts giving stock ratings to FCX in the past 3 months, we got 12 that are a buy, 3 that are a hold, 0 sell. That's interesting. So only 3 articles on them. 2 days ago, 3 days ago, and 1 week ago. Let's check it out. The most recent one. Can FCX protect margins amid higher copper production costs in Q2? This is by Anandaya Barman. Alright. Freeport-McMoRan, FCX, saw a decline in its average unit net cash cost per pound of copper in the first quarter of 2026 to $1.91 from $2.22. In the prior quarter, it also fell from $2.07 a year ago. Freeport, however, is facing headwinds from higher costs in the second quarter. FCX outlook for the second quarter suggests higher costs on a sequential basis. It expects unit net cash costs to rise to $2.24 a pound, while projecting a full year average of roughly $1.95 compared with $1.65 in 2025. The projected second quarter unit cost reflects a roughly 98% year-over-year and 17% quarter-over-quarter increase. The uptick in cost reflects higher cost of energy and other consumables due to the Middle East conflict and persistent pressure on volumes. Higher costs are expected to weigh on the company's margins. Freeport's copper sales volumes tumbled approximately 25% year-over-year in the first quarter to 657 million pounds and fell from 709 million pounds in the prior quarter. The downside primarily resulted from lower operating rates due to the temporary suspension of operations since the mud rush incident at the Grasberg Block Cave mine. While the company's outlook for copper sales volumes for the second quarter of 690 million pounds indicates a sequential improvement, it still suggests a 32% year-over-year decline. Among FCX's peers, Southern Copper Corporation reported lower unit costs in the first quarter. Southern Copper's operating cash cost per pound of copper, net of byproduct revenue credits, fell by roughly 114% decline from the prior year quarter. SCCO's operating cash cost per pound of copper declined roughly 34% year-over-year in 2025. BHP Group Limited. BHP lowered its unit cost guidance for the Escondida operation to the band of $1 to $1.2 per pound for fiscal 2026, reflecting byproduct credits and strong operational performance. BHP also projects Copper South Australia's unit cost between $1 and $1.5 per pound. Unit costs at BHP's Spence operation are expected to be between $2.1 and $2.4 per pound for fiscal 2026. The Zacks rundown for FCX. Shares of Freeport are up 69.5% in the past year against the Zacks Mining non-ferrous industries rise of 76.6%. We got a little graphic here. From a valuation standpoint, FCX is currently trading at a forward 12-month earnings multiple of 24.07, a 1.9% discount to the industry average of 24.53x. It carries a value score of C. The Zacks consensus estimate for FCX's 2026 and 2027 earnings implies a year-over-year rise of 44.6% and 34% respectively. The EPS estimates for 2026 and 27 have been trending higher over the past 30 days. Okay, that's enough of that. That's by Anandaya Barman. Pretty sweet. Let's take a look at their CEO. Okay, and so we got Kathleen L. Quirk is President and Chief Executive Officer and a member of the Board of Directors of Freeport-McMoRan. Ms. Quirk joined Freeport in 1989 and had responsibility for a broad range of corporate functions, including tax, investor relations, corporate development, and treasury before being named Chief Financial Officer in 2003. During that period, she was named Best CFO in Metals and Mining by Extel, formerly known as Institutional Investor Research. On numerous occasions, she was named President of Freeport in 2021 and became a member of the Board of Directors in 2023 and was appointed Chief Executive Officer in 2024. As a senior member of the company's executive team for more than 20 years, she has been instrumental in Freeport's strategic planning and execution of company goals. She was inducted into the American Mining Hall of Fame in 2025 and was the recipient of the Copper Club's ANKH Award, or ANK Award maybe, in 2024. She is a member of the Business Council and the Business Roundtable. She currently serves on the board of directors of Vulcan Materials Company. Miss Quirk is a graduate of Louisiana State University. Check that out. Pretty cool. All right. So I think that's going to be enough. Like we say, that big drop at 9.07% for Friday there. That's pretty alarming. And then you got over the course of the last 5 days, it's down 6.42%. It's mining stuff. Pretty interesting. Let me know what you guys think about FCX, guys. It's your cousin Dustin. Thanks.